Why have I sold all my stocks in this crazy roller coaster market? What are the signs that we have not reached the bottom of this stock market in this ongoing crash? Why does it not matter if you buy good stocks with high earnings potential and low price to earnings? Why doesn't that count for as much as it used to? Why do we get these weird bear market rallies where the bull suddenly appears and knocks us down? Hang on. This is not financial nor professional advice. This video is for entertainment only. Hey everyone. There are many factors influencing the negative stock market and making it crash. In semiconductors, the United States government has put severe restrictions on semiconductor companies as far as what chips they can sell China, because we are concerned that it will help them develop artificial intelligence and they'll be able to make superior weapons based on artificial intelligence. And we are at a dangerous point with them, with Taiwan to some extent, although it immediately looks safe, but we are concerned about the future. It is amazing how much stocks have fallen in this past year to date, especially. Advanced Micro Devices, whose symbol is AMD, has fallen 61%. Wow. Taiwan Semiconductor, that makes many of the chips. Many companies design the semiconductor chips and then they farm them out to a foundry in Taiwan. So Taiwan ends up making and doing the actual manufacture of many chips. But Taiwan Semiconductor, as bullish as you would think that would be, their stock has come down 46% year to date. Shopify, whose symbol is SHOP, has come down 81% in the past year to date. I owned it in past years, and it was going down, so I sold it at about 140, and it's $25 now. Unbelievable. Tattooed Chef, whose symbol is TTCF, has gone down 71% in the current year to date. I sold it in past years at 24, and its price now is $4.48. So if you forego that cup of Starbucks coffee, you can buy a share of Tattooed Chef. Palantir has gone down 58% in the current year to date. All these figures are current year to date figures, but it's gone down 58%. I owned it in past years and I sold it at $28, but I didn't like the way the stock was set up. It seems like they have real problems with employees getting too much of the stock as their salary. And so you have significant dilution. I think it'll make money, but I think the employees are going to see most of the money and the shareholders aren't going to see that much. I sold it at 28. It's $7.53 now. So if you give up 2 cups of coffee, you can buy Palantir. Mortgage rates have gone over 7%, and that is why my investment in the triple leverage inverse fund, DRV, has turned out to be a very nice, substantial sum of profit for me. DRV is triple leverage in an inverse way on the real estate index. So for each dollar that the real estate index goes down, you make $3. Even the mighty Apple is being affected. Its symbol is AAPL. It's gone down about 22% year to date. So it hasn't been as affected as other stocks just because it it has such huge size, and people flock to it as a form of safety. But on Friday, it went down below 140 to 138, which is significant. Tesla has recently been getting killed, and of course, its symbol is TSLA, and it's gone down 41% year to date, and it's hanging around about 204 or so. And it was not that long ago, right after the split, it was at 310. So this is a very, and the massive market cap that it was, we're talking about hundreds of billions of dollars of loss of market cap. Another bad sign for the stock market is that the 2-year bond is approaching 4.5%. I think it's like 4.47%. And then the yield curve is inverted, which means that you're getting paid more for holding bonds for 2 years than holding bonds for 10 years, which makes no sense. So if you hold it for 2 years, you get it for 4.47%. And if you hold it for 10 years, you only get 4.01%, which should not happen, which is a classic sign of a coming recession, which looks like it's going to be at least moderate. I owned a semiconductor equipment stock, AHR, AEHR, in spite of the bad news of on semiconductors, because AHR test systems, they provide equipment to test the chips, and they were doing amazingly well in spite of what's happening to all the semiconductor stocks, or most of the semiconductor stocks. But I think it's going to happen to them eventually. And the recent price action on this Friday looked like they had joined in the crash. I had like 20 stocks that I was either watching or I had made substantial investments in about 14 of the 20. And the 6 I was watching and the 14 that I invested in were all down on Friday, and it's rare to have, because it's in diverse things. It's semiconductors, it's solar, it's electric, it's Apple, it's gas and oil. It's a little bit diverse, and you just usually don't see everything go down. Except when you're in a crash. When you're in a crash, everything goes down. And to me, that's a sign that we're in a grind down crash. So I had quite a week, which led to some decisions. And I want to recap it a little bit for you. The big event was not the big event, but one of the events leading up to the major event on Thursday was on Tuesday. The producer price index, the PPI as they call it, came out, and it showed that inflation for producers had increased by 0.4% month on month for producers. Okay, so the PPI and the CPI, which is the consumer price index, don't always exactly agree, but it's suggestive, let's say. The thing is, will the producers pass on the increased costs to customers? We think eventually they will, but they may not at first, because they may not want to lose business. So they might just eat it at first until it becomes too much. But that was a hint, and the market should have gone down. And I think the NASDAQ went down slightly. That's the major market that I trade. But it wasn't much of an effect, and it should have gone down more. I didn't like the price action on Tuesday. And Wednesday, I traded both on the bullish side with my little individual stocks, and I traded SQQQ and DRV. And I did okay on Wednesday. I made some money playing both sides of the of the market, which isn't that usual for me to happen, because you get in a mindset of one way and it's hard to split your psyche like that. I could become a split personality, I guess. But on Thursday was ridiculous. After Wednesday's action, okay, Tuesday says we're probably going down on the CPI. Inflation's probably worse. Wednesday, I played around with it and managed to make some money. Thursday in the pre-market, it came out an hour before the market opened that the CPI had increased by 0.1% more than was expected. Now, if it came out as expected, that was bad. Okay, that was 8.1%, and it came out at 8.2%. But the really bad factor was core inflation, which includes the sticky part of inflation, but doesn't include things like energy and groceries. Month on month increase 0.6%. Wow. But that was a horrible read. And the market, the way the market went down immediately in the pre-market. And all the short sellers like me assumed, man, this is the big one. It's going to crash big time. And all the short sellers ran in there and used inverse funds or shorted stocks. And the market went down a couple hundred points. But then the rest of the day, it started going up and kept going up. And I think what happened is you had a massive relief rally just because it's been going down for so long, combined with a short squeeze. Most of the people selling stocks were shorters who sell their shorts. Okay, when you sell your shorts, you are actually buying. It has the effect of buying stock. And so it's massively bullish when shorters sell their stock because they're buying back the stock they promised that they would buy back later. Okay, so all these it was a short squeeze and a relief rally combined in one, and it was just ridiculous because the market should have crashed. Well, what should have happened on Thursday began to happen on Friday. And finally, Friday, the market didn't look wildly irrational. The old saying is that the market can remain irrational longer than you can remain solvent. And that's always the worry and the problem. It made no sense what happened on Thursday. What happened on Friday began to make some sense and looks like the beginning of the major crash. Good stocks don't do you as much good as they should in a crash. The low PE and the high earnings almost becomes irrelevant because you have overwhelming negative factors that makes everything crash. Everything goes down. The bad stocks will go down somewhat worse than the good stocks. Apple being an example of a good stock. It's gone down less, but it is going down. And we won't know that the crash is done until Apple has gone down significantly and begins to match some of the other stocks. But you have this overwhelming factor, and the overwhelming factor that is overwhelming us all is the Fed and Jerome Powell increasing interest rates, and the promise is to keep increasing them until inflation starts to budge. And it has shown no sign of budging in spite of inflation rates being increased massively. I'd like to give a shout out to the Maverick of Wall Street on YouTube here. He is just excellent. He has helped me clarify my thinking in many ways. Something that he said really clarified this situation for me. He said that if the dollar decreased in value, the problem is the dollar is so strong, okay? It's cheap for us to buy commodities now because the dollar is so strong. okay? And what he said is if the dollar decreases in value, becomes weaker than it is now because it's so strong, if the dollar becomes weaker, commodity-related stocks like gold and oil would probably go up, okay? And then he said if interest-related stocks, which are technology stocks a lot, they're more likely, innovative and technology stocks are more likely to be borrowing money until they get established. So if the 10-year bond rate comes down, then technology would go up. And this clarified my thinking so well, because on Friday, both negative things happened. The commodity-related stocks went down because the dollar was stronger. The dollar keeps getting stronger. And then the 10-year bond interest rate yield went up. It edged over 4% for the first time in a long time. And so that's very negative for companies that have to borrow money, which are a lot of technology companies. And so both conditions were fulfilled. It was negative for commodity-related stocks because the dollar became stronger, and it was negative for technology stocks because the 10-year bond interest rate increased. So it is an everything crash. It's affecting everything. I think we're in hard times. The Federal Reserve is certain, almost 95% certain, according to the interest rate tool, which you can find by putting interest rate tool on Google, and it will bring you numerous sites that predict what the chances are that the Federal Reserve will raise it either 0.75 or 1.0 interest rate points. There's actually like a 3 or 4% chance that they would raise it a full point. Boy, if they do that, I think I'll mortgage the house to buy SQQQ and DRV, which will be close behind. But I'm not planning to do anything but short the market until this interest rate situation either pauses or at least reduces. And if I have extra cash that I don't know what to do with, hey, money markets are starting to look good. You know, when they start paying over 4% or ramping up towards 4%, you know, that's looking pretty good for not taking any risk whatsoever. Thanks for listening and watching. This is a treacherous market. Crashes are always hard to trade, and I'm sure it has a few tricks up its sleeve left for us. And so I'm left doing the rapid trading, probably, although I am more committed to leaving the short on. I left it on over the weekend. I bought 9,000 shares, and I'm just going to let it ride, and we'll see what happens. Best of luck to you. Thank you so much. Be sure to like the video if it's been of any value to you, and subscribe if you haven't done that. Hit the notification bell if you want to make sure you don't miss a video. And thank you very much.